Hey, Mark the Meerkat here with Grok Trade with the weekend review. I'm in for Dez, D7. He's out in Las Vegas, folks, at a conference, so I'll just not be him for a few minutes. But let's take a look at the broad markets. Not just take a look at the daily, but also the weekly and the monthly charts. Since the last trading day of the month was on Friday, we now have a full month for the bar. Let me just say this. The bears are out. The bears are out. Yeah, that's right, folks. It's looking awfully bearish right now. We are in middle of correction here. And, yeah, you got to get your shorts on since it's springtime, all right? Okay, let's take a look at what just happened on Friday real quickly here. Look at this. SPY down 3.7%. The Dow Jones Industrial down 2.8. Look at the Qs down 4.5%. They were up for over 1% to open the day, yeah, and then just crashed down. And then we've had the Russell here. It was down 2.9%. Bank down 2.9%, and the financial sector was down 3.4%, and that VIX popped 11% and closed at 33.4. The fear is in the markets, folks. That's right. The VIX, the VIX, the volatility index, is definitely bearish. All right, let's go ahead and look at the charts here for each of them. Let's first look at the daily charts here going along here. So we got the S&P 500 here, back over here on the what was this? The February 24th. This was capitulation here. Look at that big, huge volume here as it shot down. This is when I believe the invasion started in Iraq, and then it ran back up, but just couldn't get above this area. Came back down. Went back, it did go up for a little bit here, didn't it? Yep, then hit up here, but not near its all-time highs. And look at this, fell back down again, and it's right to this level here, which was resistance. It now comes support until it wasn't. Bam! Look at that. What a week we had. And then on Friday, it just melted down here on the S&P. Here's the Dow, very similar, capitulation over here, and just in this tight range for the longest time. The 200 moving average acting as resistance area, and then under here, this 342 area acting as support until bam, it fell down on Friday and then just continued to fall down this whole week. The Qs, whew, yeah, they're looking the most bearish of all. Here's the Nasdaq. It's really bearish here. Look at that. Bam, 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 falling down here. Again, did the capitulation, came here, then found a way, but could not stay above that 200 moving average, big red as we call it. Fell down here and it was basing, but now bam, 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 and then Friday, kabam down here. We are now in the level where it was in February of 2021. We've given up everything over the last year, all the gains. Now we're right back to where we were in March or April of last year on almost all the markets. So, and then we've got the small cap Russell here, and it was in a tighter range than the others. And again, this was a line of support here and here, and then it just blew right through that. Tried to get back up above it, but no. Bam, bam, and bam there. So yeah, it's bearish on all the markets. I'd like to look at Bank. Bank here, it had a head and shoulders here. Let me show you. It had a head and shoulders here on the daily chart, and then it broke the neckline, and it hasn't gotten above that neckline ever since then. Falling down, it has a falling wedge pattern. Des talked about it last week, but look at that. Just broke below it here on Tuesday, and then really crashed down below it on Friday. So this is a bullish formation, and once broken, it's still bearish, folks. Alrighty, that's on Bank. And then we've got this is the financial sector itself. It was an asymmetrical triangle here until April 21st area. Then it broke below that, and it's continuing to fall. It was basing here just a little bit. Bam, down it is. Financials are sinking here now. Now, this week the Fed is having their meeting, and they're going to decide on raising the interest rates, and expecting the Fed then and during their meeting to raise the interest rates by 50 basis points. And as Investment Business Daily said it here, it said the Fed also made it clear plans to begin unwinding its 4.5 trillion, that's with a T, trillion in asset purchases made during the pandemic, ramping up to 95 billion monthly pace over the next 3 months. So they're going to start paying that down faster, trying to get this inflation under control. We'll see if they can do that or not. All right, then the VIX here on the daily, you can see we're back up here above 30. Again, the only time we've been below 20, March 28th and April the 5th. the only time we've been below 20 since last January. And that means we've been at high volatility this entire first quarter of the year. And now we're back up here in that 30 range. This is outrageous. I have some students who have for their swing trading, say if the VIX is above 30, they SOH. They invest 100% in SOH. They sit on their hands. Cash is an okay position. This has been one of the most difficult quarters to trade in the 15 years that I've been doing swing trading actively, and in the 13 years I've been a day trader actively. It's really been very, very difficult, just because it has been so volatile, so wobbly, so whatever you want to call this particular market. All right, let's go to the weekly charts here. So here's the S&P 500 on the weekly chart, and bear pullback here, and look at the volume, increasing volume. And not only that, let's take a look here at the percentages for each of these bars on the weekly. And you can look right here, if you just watch right there, as I hold over this one, for the week, this week it was down 3.3%. This week it was down 2.6%. Week before that 2%. Week before that 1.8. So that's the scale of it is for the S&P 500. Let's look at the Dow Jones Industrial Average. It too is doing a bear pullback. It was in a bear flag. It's not down to its support area here yet. Again, it fell for the week here. Looking back up there, 2.5%, and the week before that was down 1.7%. But here's the QQQ. This one is accelerating now. Look at it was starting to look like it might break out here above this upper resistance line on this bull flag, and sure enough, it did not, and it fell down. But not only that, now look right up here. Watch the percentages here on this candle right here. On that huge volume, was down 3.7% for the week. Here, it was down 3.8% week prior. Week prior to that, down 3%. Week prior to that, down 3.5%. So, that's over 12% drop in 4 weeks. Over 12% drop in 4 weeks here, with increasing volume the last 2 weeks. So we are definitely bearish, folks. And then we have the small cap Russell here, also in a falling wedge, which is bullish, and it was until Tuesday. It decided no, it was going to break down, and then it broke below the 100 moving average, and then just fell. Now let's take a look on the weekly here. Again, this week it fell down 4% for the week, down on the small caps. Week before it was down 3%. Week before that was down 4.6%. Again, in 4 weeks, folks, it's down almost 20% on the small cap Russell. We are definitely falling. All right, so let's go ahead and take a look here at Bank. Again, it fell down here, and it was basing right here for the last 3 weeks, and then till this week, bam, and then again this week it fell down 4.9%. And the small cap, the financial sector, it was in a pretty tight symmetrical triangle here. Last week it did close below it. This week it closed 4.59% below the close of last week. So definitely bearish mode. And again, look at the increase in volume as it's falling down, and fear is coming back in. Not an abnormal behavior. It's not normal behavior to make money, but that's what people do. They start to panic, they sell. Alrighty, let's take a look here now at the monthly. We just closed the month there on their charts, so let's take a look at the monthlies on each of the main one here. Look at this beautiful run up on the monthly. Had two big ones back. Then we were neutral, and then look at this month again. Looking at the right here, the percentages here. This one is 8.7% drop for the month on the S&P 500. And we take a look at the Dow Jones Industrial Average here, and it was down 4.9% for the month. Again, it fell for 2 months. It had a green month last month, and then fell back down. And it's stalling right here on the 20-month moving average. That's a very, look at it, tagged it there, tagged it here, and went resting right on it on the Dow. Then we got the Nasdaq. Oh my goodness. So look at what was going on here. We were here at all-time highs, and it fell down here in January, February. Fell. Then we got a little bit of reprieve here in March. But look at this. It pierced below this 20 moving average once, twice, Now this time, nope, did not happen. The third time was not the charm here, and we were down 13.6%. 13.6% down on the Nasdaq 100. Wow, that's a significant drop in 1 month. Then we got bank here for the month. Look at that. It's down 9.8% for the month. It was not looking as bearish as the other ones, but the last 2 months definitely down. Financial sector was, look at these huge wicks, huge wicks, huge wicks, and finally it made a decision. It's going down. Bam. So folks, that's why I said get your bear hats on when you're looking at the markets. That's for sure. Now then, let's take a look here at something that Des referred to last week, and that is the sector rotation. Sector rotation here. We've got, this is finviz.com. Well, let me move it down a little bit here. There you go, finviz.com. Finviz.com, it's free. On the daily, you can see we're not so worried about Friday. Was, definitely real estate, consumer cyclicals, and tech were down. This is just on Friday alone. Now then, 1 week wise, we take a look at here who was down the most. Cyclicals, real estate, communication services. Who was down the least was energy technology. But this is starting to get interesting now. Look at communication services down 17% for the month. Consumer cyclicals down 14, technology down 14, while consumer defense was up, and energy was down 4. But this is the one that's really revealing here. The last 3 months here, that would be February, March, and April. Now that April just closed, energy number 1, and basic materials number 2. Now, if you remember what Des was talking about sector rotation last week, when these are leading the way to the upside, we're on the cusp of a recession. They just said we have 1 quarter now that is in the negative. You have to have 2 quarters in the negative growth to be considered in a recession. Now that's, like, oh well, no, don't panic. Expect to pull back in the market initially, but then what happens again? The market has a 3 to 6 month outlook. That if after the second month, if it's there, that usually as soon as they declare a recession, that's when you have the best economic performance, because everyone's saying we're now working our way out of it, because they have 3 to 6 month view out. So, but right now is not the time to be going Texas Hold'em all in long, folks. We're definitely in a bearish market. We have to wait till we're not officially in a recession, but clearly with this super high inflation that we've been in, hyperinflation we've been experiencing, as well as a rotation here to energy and into basic materials, that's a telltale sign that definitely we are on the cusp of sector rotation into recession. So this is Mark the Meerkat. I used to be the host of the Grok day trading chat room, but recently I decided that I would stop doing that. For 13 years I've been a day trader, so I gave up my mornings for 13 years, and 10 of those years I was calling out trades here at Grok Trade in the Grok day trading chat room, and as well as mentoring over 250, 300 people now. So not just in day trading, but in trading in general. And but I decided to take my mornings back. After all, I am retired, right? So, but what we did was we converted that room into, we expanded it now for our Grok graduates. Those who are graduates of our mentoring program, who many of them are in the chat room, and there's many that were not. But we've continued that room in the morning, and the Grok graduates are now making the calls. They're saying calling out what the setups are, and they're also recording what their trades are. And let me show you what they did on Friday. So here's Friday's spreadsheet. That again, the Grok graduates are calling these things out and recording them themselves. There's the pre-market data here, but here we are. Here are the trades that they all called out on Friday. Look at that, and they were pullback, bull pullbacks, low base. Here's another low base, lots of shorts, especially again the market, if I said initially was up and then it started to fall. Most of the folks were short on Friday, and did a really good job there of, they identified it and they let us know where their entries were. They were managing their stops, but by half outs, because it wasn't going straight down, it was stalling along the way. So we had a 5% trade here by Vladimir. Here's a 3% trade by Chad. Here's a I had a 2.4 that I'm not calling them out, but I did have one in the background and then posted it later. And then we went over what those trades are. So I'm in the room 2 or 3 days a week coaching people and mentoring, and as they're making call outs, we're analyzing the trades and the market as we go along. So that's what our graduates are doing. I mean, now look at what they did for the week here. Oh, by the way, they were at 15% for the day. That's not 15% of portfolio, but 15% of whatever lot size that they're trading. But then look at the week that they had here. They were a little light on Monday. We had a lesson day on Monday, so we weren't trading as much. When I lead the mentoring class on Monday, we go into the room and I demonstrate live, for educational purposes. And then here, look at Tuesday, up 8%. We were 15% on Wednesday, 5% on Thursday, and another 15%. For the week, they were up at 45%. Now, a target for the week is 25%. Which is 5% per day times 5. A stretch goal of 50. So we were almost to the 50%. That would be 10% per day. And again, if we didn't have lesson day on Monday, we might have made it or not. We don't make money every day. And then our actual reward risk ratio for the week was 2.08. That's outstanding. That means on average that our income trades were twice as big as our average expense trade for the entire week here. And this is even better. We were at 74% success rate. Our target's 60. So, doggies, that is nice and strong. So and there were no errors reported this week. Now, this is what people are reporting out there, but it's amazing how the power of all the Grok graduates that are in there. Now, you can actually join this room for 6 weeks for free, day trading, or if you're a swing trader, we also do it at night. So let's see here. If we go to right here, if we go to groktrade.com, then you go right up here to Grok Grad Trading Room, and right here you can read about it here. Let me center this for you. And again, the day trading chat room's open from 9 to about 11:30 on Monday through Friday. That's Eastern time. And then the new swing, now we expanded that for swing traders in the evening then on Sunday through Thursday nights from 7 to 9 p.m. Eastern time. Again, that would be Sunday through Thursday. And you can talk about what market setups you're seeing as far as your swing trading. Now, if you're at all interested in doing it, you can do it for 6 weeks for free. And then if you are a graduate of the Grok mentoring program, you have this, access to this free for the rest of your trading career. So again, you can just put your information here and hit submit, and then we'll be able to get you in that room, and you can witness it either again in the morning from 9 to 11:30, or in the evenings from 7 to 9 p.m. Eastern time. All right. So that's it. That's the sales pitch. Oh, well, we do have a mentoring class coming up. If you are interested in our mentoring class, which starts with 3 days of intense training, and then we go from there. So you can just go to Hit Training Mentor, and you can read about it here. And then there is a sales form there to also fill out and hit submit. And we'll just have a discussion with you to see, how is your trading, and if what we teach in our mentoring program, it would help you or not. Now, just so you know, it's 3 days of intense training, but that's just the tip of the iceberg. What happens, because at Grok, after we give you that training, then we are your mentors from that point forward, implementing all of that. And you can come back and take that 3 days of training as many times as you want. That's all the one package deal. And it's a fraction of the cost of many of the other trading education companies out there. A fraction. So we give you the complete package and nickel and diming you, or I should say $10, $15, $20,000 at a time at it, trying to get more out of you. So this is Mark the Meerkat here. I guess the only thing I have to say is we are in a bearish market, folks, and I know that I'm now in all cash in my swing accounts, because many of them are individual retirement accounts, which here in the United States you can't go short in. Yes, I can buy bearish ETFs, but right now I'm just sitting on cash, and that's my strategy, and cash is an okay position. So until next time, trade well, trade safely, and of course, let your winners run.